Hey everybody, hey, good morning. This is me, Darius Anucauskas from Markets.com, and today is Wednesday. Ladies and gentlemen, it's the 9th of April 2025, and this is a quick video preview for the webinar, which is going to happen in a few seconds, so do not tune out. Hopefully you'll enjoy the session because we're going to talk markets, and there is plenty of things to talk about. We got the RBNZ interest rate decision, and we have the ongoing craziness with the tariffs and everything that relates to it. So, ladies and gentlemen, about all this and a little bit more in my webinar, so stick around, do not tune out. Hopefully you'll enjoy the session. Don't forget to ask questions if you wish, because this is a live session. That's the whole purpose of it. Yeah, let's see how it goes. Ladies and gentlemen, I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. This is me, Darius Anucauskas from Markets.com, and today is Wednesday, the 9th of April, 2025. Welcome to this session, to this live session, where you can always ask questions if you wish. I mean, that's the whole point of this kind of webinar, so that we would look into this live. If we can pick up on stuff which is bothering you, maybe. But look, before we jump into the markets, and we do have a lot to talk about, so before we jump into the markets, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yeah, basically, look, I mean, today, the markets are a little bit on the edge, we can say it this way, because again, there's the ongoing saga with the tariffs, with the and I think that's going to be for now, for a while. We're here to stick for another 4 years at least. This is what we're going to be talking about. Also, yeah, I mean, these tariffs kind of overshadow the rest of the stuff that's happening, especially on the economic calendar. But that's fine. I will pick up on that, and because again, it is still important. Look, also before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And let's jump into the chart. And before I say something, I have to put good morning in the chat room. Good morning, everyone, as always. There we go. Nobody managed to beat me to it, and I'm the first one. Ladies and gentlemen, Japanese Nikkei 225. Okay, I talked about this, and I told you about the 30,374 territory. On Monday, I talked about this, and I said, keep your eyes on it. Look at this magical test. I cannot call it the other way. Technically, everything kind of worked out nicely. It's still working out. So I said to you, look, keep your eyes on this hurdle. If it provides good support, we can see a rebound. Did we get a rebound? We got a rebound. Where did we get a rebound? We got a rebound towards the 38,687. We got that, but okay, we got it a little bit higher here as well. Okay, I mean, we did have a nice retracement yesterday as well. There was some positivity that there are talks happening and everything like that. But then they come out again saying, oh, you know what? We'll put an extra 50% on China, and there we go, bringing it the total of so it's a total of 104. So basically, it was 34% on tariffs on Chinese imports. Additional 50%, and adding the additional 20%, which was previously added on Chinese goods. 104%. I mean, okay, look, I mean, let's see where this goes, but I don't think it's going to be very positive in my opinion. Yeah, for now, I mean, the market is kind of feeling the heat because of that. Look. what can I say? Nikkei 225 here, it's still holding on, but in general, if it starts clearing that 30,374 territory, well, guess what? The forthcoming lower low will be confirmed, potentially attracting more sellers here into the game. And again, we'll be probably will be clearing that 30,000 zone. So hey, be careful in a way. If you're a bull right now, I think you need to be a little bit on the careful side. Yes, don't get me wrong, the stocks do present themselves with nice opportunities. I mean, because they're on a discount right now, everybody's. But I think that's for a little bit later, or unless you have, like, let's say, capital to throw out. Let's say you buy it here and then it goes down, you buy it lower, and then it goes down and buy it lower again. If you have the means to support yourself this way, then okay, you can do whatever you want, guys. But the thing is that if you most of us don't have the means or that much, so we rather try to play it safe, right? So let's wait a little bit, because again, on Nikkei here, we declined quite significantly, and we do have some data to keep an eye on. So Wednesday, for example, this morning, consumer confidence came out, and that was a little bit on the lower side, I would say. Then let's say, no, sorry, that was on Wednesday. On Thursday, tomorrow, we have the PPIs coming out. So the expectation is for a little drop by 0.1%, but it's actually going to be interesting to see where we're going to end. Is it actually going to be on the higher side or on the lower side? At the moment, I think that whatever comes out, it will have a little short-term reaction, but then the market will kind of stabilize, and like they just go with what's happening right now in the global trade arena. In terms of Friday, not much is happening. So yeah, it's mainly where's that Friday? Next week we'll have some data from Japan, but maybe more interesting data. But for now, it's on the quiet side, somewhat on the quiet side. So I think that we're just following what's happening in the world in general. Let's jump into China 50 very quickly. So we had a little bit of rebound here, as you can see. That's fine. We traveled. We traveled lower. We cleared the 12,650 territory. I talked about it, and we tested the 12,182 zone, from which we rebounded. And we rebounded and pushed back to the or at least we're trying to push back to the 200-day EMA here, but these hurdles here are a little bit in the way. The 12,740 zone so far, which is the low of the lowest point of February of this year, it's currently providing a good area of support, of resistance, and basically, yes, acting as a holdup, a temporary holdup, or at least that's how it looks. So for me to get comfortable, let's say with some higher levels on this one, I would need to see this one pushing back above the 200-day EMA, which is shown as the white line here. But until then, any move up towards it could be still classed as a temporary correction before another possible leg of selling. In terms of Chinese data, let's have a look. Inflation numbers, those are coming out on Thursday, ladies and gentlemen. Inflation, there we go. And that one is expected to pop up a little bit. Now, okay, I think that, yes, we'll have, of course, the numbers. Maybe they will come out as expected, but something tells me that next inflation, that's what we need to look at, because again, that's when the tariffs kicked in, because they're going to be March figures. We need the April figures now, because when the tariffs kicked in. So I really doubt that inflation could pick up at this point from China's side. On the contrary, it might be on the lower side. So let's see what's going to happen there. For now, we're watching all this, and we're watching the indices, and of course, still the downside pressure remains. But at this point, look, I mean, the way we can kind of play this game here is like if we do stay below the 200-day EMA somewhere, then certainly there is a greater chance for this one to drift lower. But if you're thinking of a little bit something more reassuring, then 12,180 zone, a break below that would confirm a forthcoming lower low. Dow Jones Industrial Average. So let's have a look. Let's have a look, because again, I talked a lot about this on Monday. I said to you that we could see a little bit of a retracement here, and well, this is exactly what I want to pick up on. Basically, look at this. I've drawn this. I said to you that we kind of climbed above the 38.2 here on the bigger Fibonacci retracement, and yep, we kind of aimed almost for this shorter Fibonacci retracement to the upside here, so we kind of came close to it. But okay, we felt, we traveled higher. We tried to push above, back up here, but I think that yes, the moment the whole situation with China tariff, like this. Well, the situation of between the U.S. and China, that's the big problem in a way. For now, I would say there is more downside to come in a way, in my opinion. I'm looking at this picture here on the weekly, and look, for me, it's going to be very important to see what's going to happen tomorrow, because again, tomorrow we're getting the U.S. inflation number. Keep your eyes on that one. At the moment, I did a piece on the U.S. inflation here yesterday, so you can check it out. It's a separate piece, but just to briefly kind of mention that in a way, if the inflation could come out on the lower side still, because we have March figures coming out, tariffs kicking in the in April basically, so the effect should be somewhere like in April time. But so the number which we'll get in May, that's the one that could be an interesting one. But what will be interesting to see is if, let's say, inflation does pick up, does come out higher straight away, let's say right now, and let's say on the headline, it might not, because it includes energy prices. Oh, sorry, no, the other way around, because energy prices have been rocketing in the oil. WTI oil did push higher in March, so that's what I'm saying. So okay, so this is where the interesting bit. So inflation could actually pick up here. Could show, the headline figure could show a higher number, but what I'm looking at here is the core one, which excludes. So this is where the interesting bit comes in. So if the core figure, which excludes oil prices, which in March kind of we saw it pushing nicely to the upside. If the core one, which excludes that energy price, will go up, now this means that the market, in general, market participants, in general, businesses, they try to cover themselves earlier before the tariffs kick in, and basically they ramped up prices a little bit quicker. And that's that would give me this kind of explanation of why, for example, the core could come out on the higher side, because again, this protectionism kind of kicks in, and people kind of think, okay, so let's try to protect ourselves. Let's try to ramp up prices now before tariffs kick in, and this is where it maybe we'll lower them later, right? I mean, but that never happens. But anyway, so yeah, what can I say? For now, like we're watching the numbers very carefully tomorrow. So keep that in mind. Tomorrow, yep, it is something that to consider. And the way this could play out here in the stock market, look, if inflation somehow picks up, we could see a further decline here. And looking at this weekly chart, by the way, look how well this double top pattern worked out. The neckline was here, so it's it's all nice and technical. We tested the 200-day EMA, and we haven't dropped below the 200-day EMA on a weekly since like end of September, October time, because that's when the big crash here was happening, and people were kind of a little bit panicking. And yeah, I mean, and so on and so on. So if we somehow start dropping below the 200-day EMA on the weekly, well, ladies and gentlemen, I really doubt that you could not call it a somewhat of a recession. But again, I don't want to rush into anything. For now, we're just watching, observing the price action, and yeah, where the bulls are trying to pick up, something somewhere, but they're getting crushed every time. So again, that's understandable. It's at the moment, yeah, the market is not feeling very well, and this could, in a way, continue. But as you know, so the solution is very simple in all this. One person has the power in a way, and one person can say and remove something, and there we go. The market is fixed again. But let's see how this plays. While I'm on the how this plays out. While I'm on the weekly chart, the S&P 500, this one's still going closer towards that 200-day EMA. Yep, we had a little bit of a retracement towards the 100-day EMA, and now we can see that we're drifting back down. Nasdaq 100 here, also a similar story, approaching that 200-day EMA, and let's see what's going to happen next. Again, also tested the 100-day EMA this week, yesterday, and on the weekly chart, and there we go, we drifted back down. So in a way, I think that the path towards this 61.8% on the Fibonacci retracement, which is drawn from the lowest point of 2022 to the highest point of 2025, the next target is the psychological 15,000 zone, somewhere around here, and then we'll have to go from there. And that's I'm talking about the cash index here. So long story short, for now, I would say if you're trading today, then look, today we don't have much. We in the economic calendar, we have the EIA crude oil stock change. That's if you're trading oil, but so all the action could come in on Thursday, tomorrow, so keep that in mind. And then Friday, kind of finishing off the week, basically the aftermath of the CPIs. That's when the excitement could come. So today we might see a little bit of a roller coaster ride here, up and down. So just kind of like, if you do like something like that, then okay, be my guest. But I'm trying to stay away from this for now, because for me to get comfortable with the, let's say, with the downside, I would prefer to wait for a drop below the current lowest point of April, near the, let me just remove this very quickly here, a drop below the 4,794 territory-ish. That's on the S&P. If we can clear that area, wonderful. I will get more comfortable with the downside. Let's jump into the dollar index. So the dollar index is not feeling well, so it's drifting lower, and of course, yes, we're gonna be carefully monitoring what will these guys do. And these guys are the Fed, and looking at this CME's FedWatch Tool here, you can see that the May now is again even. And look at this. Oh my God, this is the first time the probability for a cut in May has overshot the probability for no cut, because that was the case. I mean, this was something that the market was kind of already knew. It was somewhat of a given, in a way, that there's not going to be a cut in May, and this is, like I said, and now we're overshooting that. So congratulations, in a way, congratulations. So what can I say? For now, I think it's going to stay like this, and it's going to be really interesting to see and to watch May's press conference. Okay, the interest rate decision, that's one thing, but the press conference, yes, I mean, that's going to be quite an interesting sight. And of course, as we all understand, because this is, like I said, it's all because of yesterday's announcement that there's going to be, like, in total 104% in tariff on Chinese goods. So that's quite damaging for the U.S. economy, in a way, because the U.S. economy is a consumer economy, and they consume a lot, and a lot of goods from China. So okay, we'll see how it goes. Of course, I mean, if, I understand that the goal here is to bring the manufacturing back into the U.S., but certain things you cannot bring, because again, the skills and the some skills and some what can I say, skills and let's say the pay. Of course, it's understandable that outsourcing, putting it somewhere else out there, it's cheaper and sometimes even better. So in the end, good for the iPhone, for everybody who's like who are iPhone fans, and like for you now, the iPhone will not be, let's say 1,500. Now it could be 3,000 or 4,000. So in a way, okay, we'll go back to Nokia's, and stuff like that. So I think that this is this is good. This could be an idea, but which probably not a bad idea in a way. But hey, look, what can I say? For now, we're watching this carefully. What I'm interested here in this December meeting. So what's happening here? One, two, three, four. Now we shifted from 5 cuts to 4 cuts. Okay, interesting. So we're shifting towards the idea that maybe cuts would happen quicker and we don't need 5 cuts in total. So that's why maybe this has shifted towards the lower side a little bit. Okay, look, in general, of course, that's not playing out very well for the US dollar. US dollar is feeling the heat right now, just because again there are expectations that the cuts will happen quicker and there will be more cuts, so that's why we're seeing the US dollar drifting nicely to the downside. The German index DAX, and look, this one slowed down after a nice decline on Monday. We slowed down, we rebounded, but we remain below the 200-day EMA. I'm not going to say anything here, to be honest. I'm just going to say that, look, as long as we remain below the 200-day EMA, I'm going to continue targeting the downside. And another thing is that where we are going to be looking at next week. Let me just show you what I am talking about. So the interest rate decision. And we are expecting a drop towards 2.4%. At the moment, of course, there's no forecast, but in general, yes, there is an expectation of a cut, which is upcoming, and maybe that's what could, help the stock market kind of boost back up or jump back up. But at the moment, I think that yes, the trade news are overcrowding the logical or maybe not logical or something like that, but the economic calendar. So there are major events on the economic calendar, and it seems like that those are overshadowed right now with the tariff wars. Now jumping into the FTSE 100 here. Look, by the way, for me to get comfortable on this one to the upside, I would need to really see this one pushing back above the 200-day EMA. But of course, it's not a guarantee that we're going to go much higher here. No, but at least for a larger correction, maybe. The FTSE 100, yep, continues to slide. It's not good here, and wow, look at this. So the FTSE, from peaking in March here all the way down here, we're now doing around 15% drop. That's a lot for the FTSE, so yeah, I'm wondering where this is gonna go further. Are we gonna go further somewhere here? Well, to be honest, that's what I'm gonna aim for, because I'm gonna aim for this little area right here around the 7,200 zone, near that area, and then we'll go from there. Here, it's a roughly around 19% decline from the peak of this year, and then we'll go from there. Let's jump into the Forex world, ladies and gentlemen, because I have to pick up on RBNZ, which I'll do in a bit. But here, look, we remain below this 0.6087. I talked about this. I said that if we do continue to trade below this, and look how yesterday we came nicely testing this area. We tested this area, boom, and then we started selling off again. So we drifted lower. Look at this. Now this is going to be quite interesting, actually, because we dropped below the current, well, the lowest, previous lowest point of this week. We created a new low for the week, and then we pushed back above it. So, okay, that's interesting, because that kind of puts this into more of a positive perspective, because maybe given that the US dollar is kind of drifting lower and it's not really loving the fact that there could be a cut in May, maybe AUDUSD could actually retrace back up a little bit more. So if we do measure this one, we apply the Fibonacci, my beloved Fibonacci, from the highest point of April to the current lowest point of April, we're seeing that we could still go towards that 0.6025 territory. So that's not far. Quite doable in my opinion. And yep, then if we do clear that one, I would say the next target here could be this 0.6095 zone. So keep your eyes on this one. And then we'll take it from there. If we do clear again that 38.2% here on this Fibonacci retracement, then okay, great. I will consider slightly higher areas. But if this provides good resistance, then another decline could be possible. AUDJPY continues to slide, nothing new here, and my target got reached. 86.05, that's what I was aiming for. Now I'm going to say that, look, I'm not going to spend too much time on this because, again, so far this is like working like a charm. And I would say this way, if the economic situation does not improve, AUDJPY will continue sliding further south. My next target will be somewhere around this 80.36 territory, maybe the psychological 80 zone. I think that could be doable, and then we'll go from there. NZDUSD. So of course we saw a little bit of decline, initial decline, but so basically you would say that, you know, lowering the rate. Where's that? So lowering the rate is not really a good thing for the currency. So we dropped from 3.75 to 3.5. That was expected, and maybe that was already kind of priced in. So we did have a negative reaction, but then the fact that we're rebounding here is kind of indicating towards the idea that not that the economic situation is improving, because NZD is a risk currency and it's a commodity linked currency as well, but the fact that here is that the US dollar is weakening, so weakening quicker than, you know, than the NZD. So we're getting this kind of reaction here a little bit to the upside. Also, similar story, we dropped below my 0.5510 territory. I talked about this yesterday. We dropped below it and we only created like a little false breakout. Don't get me wrong, we're still running the day. A lot of things can happen. If the US dollar strengthens, then we could see this one reversing back down. But so far, it's looking a little bit more on the positive side. Let's jump into USDJPY very quickly. So yes, beautiful move to the downside here. And yep, for now, I'm still targeting the downside, especially given the fact that the US dollar is not feeling very well. So what I can do here is I can keep an eye on the 144.54 territory. If we do drop below that, we could, yes, this could confirm a forthcoming lower low. For the upside, very straightforward in a way, I would need to see here, and this is where I will redo the chart a little bit. So I'll remove this downside line first of all, no longer needed. What I'm going to do here is I'm going to keep an eye on this low, the low of 11th of March. And if we do start pushing back up to the 146.53, 54 zone right there, I'm going to start considering a slow movement to the upside. And then we'll just go from there, ladies and gentlemen. I do have this little area in mind as well, the 148.17. Also, if it gets cleared, it can open the door to some higher areas. US dollar against the Canadian dollar, it's a little bit of a mess, so that's why I'm very conservative here on this one. I will lean towards the downside if we do drop below the 1.4067, and for the upside, a break up this downside line and a push above the 50-day EMA here would be nice for the bulls. USDCHF continues to slide, nothing else to add here. Everything's according to the plan, honestly. Like, look at this, I've reached my target. 0.84, I aimed for that one. What can I say? It's like a dream come true, right? So at the moment, this is not really finding good grounds. However, this area, maybe, just maybe, we could see a hold up somewhere around here, or around these three levels: 0.84, 83, 740, and 0.8332, something like that. The last one is the lowest point of December of 2023. So I think that this is quite logical to aim for. I think that we could see some consolidation somewhere around here. So, but if you're not really comfortable with this, ladies and gentlemen, I would strongly recommend not to touch it and just keep an eye on this. So yeah, for now, I would say yes, the risk-off environment continues to remain, and we are carefully monitoring that. Once that kind of shifts a little bit towards positivity of some sort, we could see this pair rebounding and pushing back up. But for now, it's in a way, it's only downside scenario for it. EURUSD, of course, we're waiting for next week, what's going to happen there. But at the moment, the euro is enjoying the moment, it seems, against the US dollar. And but at this point, look, my mission has been accomplished. I was initially aiming for this downside line area. So what I would like to see here is a break of this downside line. If we can get that break, which is taken from the low of the, the high of the 18th of July 2023. If we can clear that downside line, I will go higher. But the thing is that this downside line is a little bit on the tentative side, because maybe you draw it this way, maybe you draw it that way. So, you know, let's actually put it this way, because capturing this peak, the highest point of September, because that's kind of it's like the last point, you know, last checkpoint. So if it clears that one, yeah, it kind of gets a little bit more bullish. But at the moment, it's a little bit on the tricky side. EUROJPY still holding on. Look at this. We dropped back below this downside line, but we remain above it. Interesting. So this kind of proves to me that the bulls are not really giving up. So I think that this scenario is still valid. Sorry, we ran out of air here a little bit. Euro Aussie, of course. Look at this. Okay, now with this one, I'm kind of hoping to see a little bit of retracement, because we're seeing like something of a shooting star here forming. So let's see if that's going to be the case. Maybe going into tomorrow, who knows? But again, looking good here. And what can I say? I mean, maybe depending on how this is going to end, I'm kind of keeping a close eye on this one, because if this is going to form something like a shooting star, then maybe, yeah, going into tomorrow, we could see maybe a little bit of a retracement back down. Let's see. And if it's a retracement back down, then I'm aiming for the 1.8121 zone, somewhere around here. Just to remind you what that level is. That's the, where is that? That's the highest point of April of 2020, ladies and gentlemen. We surpassed that this April. Like I said, this is going to be my next target if we go for a bit of a retracement. I mean, look at this spectacular move. I mean, wow, this is just wow. Euro CHF, very similar action here, also to the downside, but yeah, it cleared the lower side here. I talked about this one on Monday. It cleared the upside line here, and we drifted lower. So the next targets to consider are somewhere around here. So the 0.9255 zone and this 0.92 area, maybe slightly above it, but still 0.92 area. I think that could be a nice good next target. I will get more comfortable with that idea if we continue to trade below the 0.9331 zone, somewhere here. That was a good area of support previously. Now it could take the role of resistance. Yes, we overshot it today by a little bit, but if we continue to trade below it, and like I said, that's kind of giving me more support towards the downside. GBPUSD. So again, beautiful hold up near the EMAs. We did overshoot them to the downside here, but yeah, it's like it's okay, it's fine. We retrace back down, back up here, but we remain below the 1.2875. As long as we stay below it, there is a good chance for this one to drift back down. GBPCAD. GBPCAD, it's the interesting moment here. Again, the 100-day EMA is showing good support, and if we do fall again below that 100-day EMA here on the daily chart, then I'll consider a move towards the 200-day EMA. CAD CHF very quickly continues to slide, of course, obviously, and CHF JPY, call it the battle of the safe havens. You can see which one is the stronger one. The Swiss franc is beating the Japanese yen, but we're approaching key area of resistance, so keep that in mind, ladies and gentlemen. If we do clear that downside line, okay, great, wonderful. I'll go, for more upside, but At the moment, I mean, maybe we had a good run, so maybe let's see if we can do something like this. But I'm not gonna get very comfortable with the downside, only up until somewhere here. Only up until somewhere here. This upside line taken from the lowest point of the low of the 28th of February. So we could, like I said, we could get a nice maybe hold up somewhere there. Let's jump into the commodity world. Gold. I mean, look at the spectacular move. Gold is pushing nicely to the upside again. We climbed back above the psychological 3,000 zone, and in a way, that's something that people are thinking about, and people are thinking, hey, look, what if it is a nice little reversal back up here? It could be, but I would say don't rush, because what I'm looking at myself right now is something around these lines. Now, this 3057 territory kind of is doing a good job in a way and is providing good resistance. And another thing that I really want to be careful about is this idea of a possible neckline, of a possible head and shoulders pattern. Now, it's a little bit of a tilt to the downside, but again, let's keep an eye on it, because again, look, I said it multiple times and I'll say it again. Whenever we, hit economic downturns, yes, gold can be the go-to safe haven in a way, but in this case, in this specific scenario, we can see that, look, a lot of countries were buying gold prior to this current financial downturn, and they were all piling up, ramping up the price of gold in the market, and there we go. We now could be seeing some countries selling their gold, because again, it's better to sell at the highs, right? And selling their gold and kind of jumping into cash, so to keep that money for, let's say, bailing out something like in your own country, and or support, just basically supporting the economy. So that's what I'm saying. So it's a good store of wealth when the times are good in a way, but when the times go down, although people think that it's a safe haven, yes, it is, but again, because countries are the biggest buyers of gold, they are, the biggest stock. They have the biggest stockpiles, and then they kind of sell it when cash is needed. So it's quite liquid, the gold, and that would kind of brings the, they throw out a lot of gold into the market, so basically increases the supply. So that's what I'm saying. So just be careful with that. This is an idea, of course, don't get me wrong. I might not be right. However, this is an analysis. I'm trying to approach things logically and trying to understand why the hell we're getting these, like sell-offs in gold when the market is selling off as well. So that's what I'm saying. For now, yes, we're seeing this rapid jump here this morning. So the European morning just started. The US has not started yet, so we're seeing gold now shooting up here very quickly by about like $60 to the upside. So it's a bit of a crazy moment, I would say. So just be careful with what you're trading and how you're trading, and just like I said, at the moment it's a tricky situation. So like I said, I'm carefully monitoring that 3057 territory. If we push above it, I'll get kind of comfortable. I'll slowly get comfortable with the upside, to be honest. I will then aim for the 3,100, 114 here, and we'll go from there. Let's jump into silver. Silver is actually indicating me that we're not done with the downside, because look at this. This is a daily chart. We nicely traveled to the downside. We traveled towards this area here, the 28.72, 73. We cleared it, but when we pushed back above it, we're pushing now higher, but we're still below the 200-day EMA. So in a way, from the technical perspective, this is looking all bearish if we stay below the 200-day EMA. If we do that, then yes, I'm leaning towards the downside. Let's have a look at actually palladium, like these metals. I really do like to look at these, and of course this one's looking still bearish. Platinum looking quite bearish as well. We're having a little bit of a retracement here, but that's fine. Maybe, like I said, maybe it could get a hold up somewhere here. Let's see, in this 930 zone. So for now, yes, still somewhat bearish. Copper, I mean, look at this. Of course, copper is not loving the moment because China consumes a lot of copper, and if we're expecting a little bit of a slowdown in the Chinese economy, then certainly not much copper is required. But look, dropping from here from 5.3 to all the way to 4. I mean, yeah, that's a big decline. Does it present itself with a nice opportunity for later on? Sure, of course, but it depends on how much, how long are you willing to hold this one. If you're willing to stay with this one for a few years, then maybe, yeah. But again, just at the moment, I would say just look, we need some more clarity. We need to see what's going to happen next. Are we going to actually end up in an economic downturn or like recession of some sort? If we do, then copper could actually drift further south. I mean, this is, like I said, this is not the, yes, we're approaching a key area of support, but it seems that at this point it doesn't mean anything. WTI oil. Congratulations to everybody who was, I talked about this one. I told you on Monday, we reached the $60 mark, and I said, we look at this, first we dropped below the, on Friday, if I'm not mistaken, yeah, Friday we dropped below the $65 mark. There was a historic drop here. I talked a lot about this already, and I said my next target is the 61.80 zone tick. Then I said that if we clear that one, my next target is the 57.26 tick. We rebounded somewhat right now, but hey, I don't think that this could, I mean, at the moment I'm still bearish on this one and trying to find a good area of support, which could be tested again. So for me, at this point is the 53.82. That's one of the areas, and then the next one will be somewhere around here, the 51.44, and then we'll go from there. Period. Keeping an eye on the EIA crude oil stock exchange today. Let's see what number we will get. Let me just double check and refresh my memory. What do we have here? Crude oil stock exchange. We're expecting a drop in in inventories. So interesting. So let's see what's going to happen here, because again, let me just double check another source. I like to double check sources because again, sometimes, it's some numbers could be off a little bit. Yeah, I'm hearing. Yeah, so it seems like we could see a little bit of help here for the crude oil. So we're saying that there could be a drop in inventories in stock change. So this is kind of beneficial for the price of oil. So let's see if that's going to be the case, ladies and gentlemen. I mean, we're already on the lower side here. So okay, if it comes out, let's say somewhere in between 2.2 and 6, this 6.165 number, I don't know, it still is lower. So that was the previous number. It comes out somewhere, let's say at 4. I don't know, like if this is okay, maybe it will slow down the drop here, but it's still going to be bearish. Natural gas is drifting lower. So far so good. I talked about this and I said that I'm gonna stick to my EMAs actually, and I'm gonna stick to my EMAs, and I'm gonna just kind of aim, keep an eye on the 100, the 50, and the 200. So I said that if we do drop below the 100, my next target is the 200 EMA, and that's what I'm gonna aim for. I'm not gonna really invent here anything else, but just stick to that. Coffee. Let's have a look at coffee. Dropped below my hurdle here, the 366. And so far so good. So yeah, my next target is the 200-day EMA period. Very simple. I'm not going to spend too much time on this one, but yeah, my next target is the area slightly above the 300 zone. Sugar. Let's have a look at sugar. Approaching my key area of support. Let's see what's going to happen if we're near this upside line taken from the low the 21st of January. If we can rebound, great. But if we cannot, then this is looking bad for for this commodity. Cotton. Oh, well, I like cotton. Look at this. I mean, this is amazing. Look at this. I talked about cotton on Monday. And I said, look, keep your eyes on the 62.38 zone, because the fact is that we cleared it and then we kind of stayed above it. We closed above that hurdle. We rebounded. So far so good. Now let's see if we can travel back above the 50-day EMA, which is shown here as the green line. If we can do that, amazing. I'll go to some higher levels. Let's jump into the crypto world for dessert. Bitcoin. Right. All right. Okay. Sorry for the lines. And you know what? I really want to do. I want to remove everything and maybe start fresh. Look, what we're seeing right now is a correction. The reason why I'm saying it's a correction because we are still. Come on, zoom in. Let's have a look at this way. We are still above this upside line here. Now, it's a little bit on the tentative side because maybe you actually have to draw it this way here. So by this, we're seeing that, yes, there is still room for the downside. But in general, overall, it seems to be like a correction because if it drifts lower, tests this upside line and rebounds and pushes back up, I think that, yes, there could be, that's why we could see this one as a correction. But at the same time, we are seeing somewhat of something like this, where it could be a possible kind of either falling channel or a falling wedge pattern. Now, if it's either way, while we remain inside this pattern, I would say I'm gonna remain bearish. If it's a falling wedge pattern, then certainly such patterns tend to break to the upside according to all the TA rules. But again, we've seen this happening in the opposite direction. It's not 100%. I think it's like something like 70% that breaks out to the upside, but again, 30% still happen. So at the moment, that's what I'm saying. That's why you need to wait, and you need to wait for the actual breakout in order to consider a move higher. But at this point, it's kind of leaning a little bit more towards the downside. I think that the area below the 70,000 mark could be quite reachable. Bitcoin Cash. Now this one I like, I really, really do. Look at this. I mean, this is fighting hard, and this is really trying to fight hard and push back above the 272 territory. That's amazing. For now, I'm still cautiously bearish, to be honest. But the fact that it's like trying to climb back here, okay, great. I mean, that's really good. Good fighting here. But just general fundamentals of the market. Look, crypto, somebody might say, and this is what I was like talking to my colleague yesterday about, and cryptos can be seen as safe havens in a way at some point later on in our lives. Until they're still unregulated, there's still a lot of issues, a lot of scam, a lot of big companies like collapsing with millions, billions are, either stolen or, just wiped out somewhere. That's like not stability. That's what I'm saying. So that's why people are very careful with that. And that's why there is this, like I said, I don't think that at this point it could be seen that as safe haven. So, for example, if somebody's thinking like, oh, I'm going to put money into the cryptos because, they can give us a better return, but that's still speculation. So, and I can safeguard my money because the stock market is crashing. With the stock market, it's like not all companies will crash. That's the thing. The cash-rich companies will survive, and you kind of need to just find those, in a way. They might not perform the best because, again, if it's a market downturn, then they cannot really perform best. But there will be a few unicorns that will. But at the moment, yeah, it's the crypto world is also not the best place, to be in because again, there are still some risks to the downside. Ethereum, 1,350 zone. I'm aiming for that one. Look, we remain below the 1,500. As long as we stay below it, I'm continuing targeting the downside here. Ripple near the 200-day EMA. Oh, look at it. Oh my God, look at this beautiful test of the 61.8. Amazing. I love it. 1.60 territory got tested, so that's great. So yeah, we pushed back above the 200-day EMA. So in a way, there's kind of indication that there could be some recovery here, but let's not rush into things. Look, I'll take a simplistic approach. If we do drop again below the 200-day EMA, I'm leaning towards the downside. If we don't, if we stay above it, I'm not going to say that I'm going to be very bullish here, no, but if we somehow start climbing back above this little hurdle, this 1.90 zone, I will get a little bit more excited with the upside. Litecoin, one of my favorite ones, beautiful test. Look at this beautiful test of this upside line. I talked about this on Monday, and look at this. We tested this upside line. This one's taken from the for a while now, from the lowest point of March of 2020. That's the decline. That's the economic decline we got, and then we rallied. So we're quite low, I would say, and Litecoin seems to be holding on quite okay-ish, in my opinion. So let's see, what's going to happen here. Can we get that rebound or not? If we cannot get that rebound to clear this upside line, then I'll go lower. Dogecoin, that one's not feeling very well as well, but it's holding nicely above the 0.1416 zone here. I'm talking about this level, and I've talked about this, mentioned this, so let's see if we can continue trading above it. If we can, a bit of rebound here could be possible. Polkadot is also trying to hold on, but a little bit struggling, I would say. So if it continues to trade somewhere below the 3.57 territory, I'm going to continue targeting the downside. Ladies and gentlemen, and that is a wrap. Thank you very much for watching and listening. Too bad that nobody wanted to ask questions. Thank you very much. I really appreciate your time, ladies and gentlemen. So if you do have a question in general, you can always leave a comment below the video, and I'll pick up on that one, and I'll come back to you in the next session. But thank you very much. I really appreciate your time, ladies and gentlemen. Stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you later on Friday, by the way. 7 o'clock GMT time, if you were wondering. Thank you very much. Bye-bye.